Planning for retirement? Well, there is a major expense that often flies under the radar. Taxes. For many retirees, taxes can become one of the most significant drains on their savings. So how can we manage this financial reality head on? Joining me now is Ed Wright, a partner at Golden Reserve, a Cincinnati area financial retirement planning firm. And Ed, we're so glad to have you with us today.
Thanks again for having me.
Yes. So Ed, why do you believe more retirees don't prioritize tax strategies as part of their overall planning?
Yeah, so when we think taxes, it's really easy to think about last year.
Yeah.
Right? Let me get my W-2 together. Let me get my 1099s in. Let me prepare my taxes. And then when we're done with that, we're like,
yeah.
Right? It's so easy not to look forward
Sure.
and want to maybe pay a little bit extra tax. So it's easy just to kind of fall into the routine and not think ahead.
Yeah. What are some of the most common tax mistakes that you're seeing retirees make?
Really, it's simple. It's just not having a proactive plan and just defaulting into what the industry is going to want them to do. So that's just take out the little as they can and just let Uncle Sam's plan run the roost, and we don't want that to happen.
Absolutely not. And then we have to think about penalties. What type of penalties should retirees be aware of right now?
Yeah, so there's a couple of penalties written into the tax code. One of them, we call it the widow's penalty. So that's when one of the spouses passes away, that surviving spouse now can pay twice as much in taxes because they're no longer in a married bracket. They're in a single bracket. And then when that money goes to the kids and that surviving spouse passes away, the kids can get hit with larger taxes because they've got a short period of time to take it out.
Yeah.
And that's the kiddo's penalty, where Uncle Sam's getting 3 times as much.
Yeah, some things definitely to be aware of.
Absolutely,
sure.
yeah.
Okay, what about strategies that can help retirees use maybe to minimize their tax liability?
Yeah, so having a proactive plan of when we're going to take money out of our accounts, when we're going to pay tax on it, can actually help folks because they can take advantage of that low income that they have in retirement and take advantage of those low tax brackets. So having a plan from a CPA can really help folks make sure they're paying the least amount possible.
Yeah, something else good to remember. And how can your IRA tax plan kind of help with this?
Yeah, so we actually, for folks that want one, we'll put together a roadmap for retirement, and in that, the very first tool that we put in there is our IRA tax plan. We have internal CPAs that do the math so that folks can know exactly when and how much to take out so they don't overpay in taxes and Uncle Sam gets the least amount possible.
You mentioned that roadmap. How can this really help retirees navigate the retirement planning process?
Yeah, so the IRA tax plan is only one part of the roadmap. There are other parts like a fee filter so that folks can know what they're paying in fees. There's a market analysis report that tells them how much market risk they're taking. And then there's a long-term care plan that addresses legacy at the end of our life and how we're going to pay for those long-term care stays.
Yeah.
So there's a lot of other tools that we can bring in for folks that want one in that roadmap.
Yeah, and so many things to think about.
Yeah, thank you.
All right, thanks so much, Ed. And for you at home, if you want to learn more about minimizing taxes and maximizing your retirement, Ed has a great offer for you. Right now, for the first 5 callers with a portfolio of $500,000 or greater, he's offering a roadmap for retirement. You heard him talk about that. This will allow Ed's team of retirement planners to create your tax plan, fee analysis, long-term care plan, market report, and income forecast. And they will do all of this work for no charge or obligation. It is just that important. Call 513-912-4335. Again, that number is 513-912-4335.